Ladies and gentlemen, distinguished speakers, dear audience, first and foremost, let me extend my warmest welcome to you all, joining either in person at our headquarters or online via WebEx at the joint conference of the European Investment Bank and the Magyar Nemzeti Bank, the Central Bank of Hungary. My name is Georgina Juhász, and on behalf of the International Relations Directorate of MNB, I'm pleased to be your host today. Today's conference is organized under the theme of investment and investment finance in Hungary, and it serves the purpose of introducing the EIB's investment survey for Hungary, which gives a unique insight into the corporate investment landscape in the European Union and our country. The EIB Investment Survey is conducted annually since 2016, and it gathers qualitative and quantitative information on investment activities of small and medium-sized businesses and larger corporates, their financing requirements, and the difficulties they face. The report comes with country-specific results for all EU members. In 2021, for the first time ever, our institutions jointly organized a virtual event for presenting the key findings of the annual EIB Investment Survey for Hungary. The virtual conference was undeniably a milestone in the professional cooperation between Magyar Nemzeti Bank and EIB, and building on its success, we are here today and having this event in a hybrid format. Today, leading experts and policymakers will discuss the challenges, the investment needs, and the priorities ahead of us, with special focus on digitalization and green recovery. The official program will start with the high-level opening remarks, after which first-hand results of the EIB Investment Survey will be presented by EIB's officials. This will be followed by a presentation of the Central Bank of Hungary on green finance activities in Hungary. Later on, a high-level panel discussion on financing the digital and green transition in the corporate sector will close the event. Before we start, allow me a few housekeeping rules. Those who are participating in person will have the chance to raise questions and comments at the end of a panel discussion in a Q&A section. And online participants are encouraged to raise their questions in the WebEx chat function. Finally, I'm pleased to give the floor to Mr. Barnabás Virág, Deputy Governor of the Magyar Nemzeti Bank, who will deliver his opening remarks.
Thank you. So, dear Vice President Czerwinska, dear guests, participants, ladies and gentlemen, I'm pleased to welcome you today to the second Investment and Investment Finance in Hungary conference jointly organized by the European Investment Bank and the Magyar Nemzeti Bank. It's a special pleasure that the pandemic situation allows us this year to hold the conference in a hybrid form. The goal of today's meeting is to provide a platform to discuss and share our views on investment activities and strategies in a decade of global inflation, geopolitical tensions, digital and green transition. Sustainable economic convergence and transition to an environmentally sustainable economy requires persistently high investment rate. In the period prior to the pandemic, investments played a key role in the Hungarian economic growth. We strongly believe that the high investment ratio and, in particular, green, energy-efficient development and smart investment should remain key in the 2020 decade, as it fosters not only the short-term growth, but the long-term competitiveness and sustainability as well, and will help in contributing to a decline in inflation. Today, the question is no longer whether central banks should address environmental sustainability, but how they can encourage green investment. The Magyar Nemzeti Bank is committed to support the green transition of the Hungarian economy and is at the forefront of greening the financial system. As a milestone, the bank's mandate has been supplemented with the support of government's policy linked to the environmental sustainability among the first in Europe in 2021. In line with the green mandate, the NMB approved the bank's green monetary policy toolkit strategy and decided to launch 2 new programs, the Green Mortgage Bond Purchase Program and the Green Home Program, to boost green mortgage lending and improve the energy efficiency of the domestic housing stock. Our new cooperation with the European Investment Bank, which we signed today with Vice President Czerwinska, is the next important step towards supporting green investments in Hungary. The agreement between the EIB and the MNB unlocks more options for financing long-term green projects in Hungary. Our cooperation will boost green investments, sustainable economic and social growth, the post-pandemic recovery, and climate actions in Hungary as well. I sincerely hope that the Hungarian economy and both of our institutions will benefit from our cooperation. Once again, I would like to thank you and your colleagues, Madam Vice President. I believe today's conference will help us better understanding how we can accelerate investment dynamics in these difficult times and what challenges we are facing to achieve sustainable economic growth in the area of digitalization and green transition. I would like to wish you a successful and pleasant conference. Have a fruitful discussions today. Thank you very much.
Thank you very much, Deputy Governor, for these warm and inspiring words. And now it is my pleasure to give the floor to Ms. Teresa Czerwinska, Vice President of the European Investment Bank, to deliver her remarks.
Good afternoon, ladies and gentlemen, dear Deputy Governor Virak. I'm very pleased to welcome you to the joint event on the role of policy support for investment as the Hungarian economy is recovering from the pandemic, moving into the new normal and continue on its path in the green and digital transition. Today's workshop is organized together with the Central Bank of Hungary, and I'd like to thank Deputy Governor and colleagues from the Central Bank for making this possible. It's really a pleasure to be back in Budapest. And yesterday I've learned a word, Jonapok. So I hope that my Hungarian will be developed during the seminar. So this event marks the second time that we present the findings of the EIB survey and our annual investment and investment finance report in Hungary, but it is the first time we are able to make it in person. So today, as Deputy Governor mentioned, we signed an agreement with MNB on cooperation regarding supporting green economy. And this agreement is a very important step in our long-term collaboration with Hungary. In the last couple of years, EIB supported several long-term investments in Hungary, providing loans for strategic infrastructure developments, both rail and road, as well as financing long-term green projects, both of which requires long-term financing, preferably in local currency. European Investment Bank is promoting green investments of public transportation companies such as MAF, Volan Bush, and GISEF. We also signed a finance contract for financing investment into energy efficiency and application of renewable energy under Hungary's home renovation program. EIB is financing investments in the field of education and research and development, as well such as developments by Budapest University of Sports Sciences and Physical Education and the University of Perch, and the construction of a state-of-the-art laser research facility in Szeged. In order to continue and to further increase the support towards Hungarian economy, this cooperation with Central Bank of Hungary is a very important milestone. Now the EU economies and Hungary are moving out of the unprecedented shock the pandemic caused, and we are transforming towards so-called a new normal. The newly emerging, hopefully more resilient and a greener economic environment is shaped by investments that are undertaken now. Policy support at both domestic at the European level as well played a crucial role during the last 2 years to maintain economic activity and making it possible for firms to keep up their operations. The European Investment Bank Group response to the pandemic was mainly articulated around 3 pillars. First, an immediate response package of 28 billion euros made available as bridge financing or top-ups to existing EIB and EIF operations. Second, substantial support for healthcare measures both within and outside the EU, including financing for the COVAX initiative and the EIB's support for the development of the Pfizer-BioNTech mRNA vaccine. And thirdly, finally, a pan-European guarantee fund. The EIB group set up the 24.4 billion euros European guarantee fund backed by 22 member states. Last year, EIB Group scaled up its activities, providing a record 95 billion euros in financing, up from 77 billion euros financing in 2020. Almost half the group's financing, 45 billion euros, went to small and medium-sized enterprises impacted by the pandemic. Financing from European Investment Fund accounted to 30.5 billion euros of the total, also was a record. Public support in the times of COVID-19 was vital to keep economies alive. It was aimed at shielding firms to prevent further pressure being put on demand. As such, this support was not designed to foster long-term economic growth. Public support was warranted because firms ran into difficulties due to government measures to restrict the spread of the virus, not because of fundamental issues with their business. While a debate has emerged on the possible side effects on public support, including the risk of misallocating resources, EIB study conducted by our colleagues finds no evidence of public support being misallocated across various industries. The prevalence of firm-level policy support was more strongly linked to changes in revenue across sector and not by the pre-COVID firm performance. In Hungary, the economy has seen a strong recovery from the pandemic. Investment has already seen a positive growth already in 2020, and corporate sector investment has been contributing significantly last year. The EIB Investment Survey also reports on this recovery. Firms operating in the EU and in Hungary as well demonstrate a positive outlook on future investment, bouncing back from low investment levels witnessed during the crisis. The most commonly cited future investment priority among firms in Hungary is expanding capacity for existing products and services. It is indicated by almost 40% of respondents, which is above the EU average, which is 32%. Our survey shows that the share of firms with no investment plan in Hungary declined. In a post-pandemic world, digital investments are essential. In Europe and in Hungary, firms took the pandemic as opportunity and benefited from policy support to transform, with around 2/3 them expecting to permanently increase their use of digital technologies. This is absolutely crucial to remain competitive and avoid widening regional digital gaps. On climate transition, second very important issue, climate transition presents not only means challenges, but also opportunities for Hungarian firms. According to our survey in Hungary, the majority of the firms are concerned by the impact of climate change. similarly to their European peers. On average, 29% of firms in Hungary have already invested to tackle the impact of weather events, a lower share compared to the EU. But around a half, 49%, have plans to invest in these areas in the next 3 years, a significant increase if we compare to 2020. Despite the massive policy support deployed during the crisis, some bottlenecks still remain. In Hungary, since our survey in 2020, there has been an increase in the share of firms citing the availability of skilled staff, 69% versus 54% respectively, and access to digital infrastructure. The firms cited that those both are the main investment barrier. So I must say that recovery from the pandemic might pave the way to an investment-driven economic transformation and continued growth. Investments finance should increase the medium and long-term growth potential and productivity, increase the economic and social resilience, and facilitate the green transformation of the Hungarian economy. Let me finish by saying that we need a joint effort now so that we will be able to say in 10 years, yes, it was difficult, but we used the crisis to change for the better. As the EU Climate Bank, we stand ready to fully support this huge and challenging endeavor. I would like to stop here and perhaps hand over to my colleagues, Chief Economist Deborah Revoltella and Peter Harastosi, economist from the EIB, to present the investment survey. Thank you very much.
Thank you, Vice President Czerwinska, for the comprehensive and inspiring speech. And now, as you mentioned, I'd like to call on stage Mr. Deborah Revoltella, Chief Economist of the European Investment Bank, and later Mr. Peter Harastosi, Economist at the Economic Studies Division of the EIB, who will shed some light on the EIB's latest investment survey. The floor is yours.
Thank you very much, and it's really a pleasure to have an opportunity to present the results of our study on investment and investment finance in Hungary. What I will do is, what I'm going to present is the results of a survey that we run on an annual basis. It's already 6 years, that looks at firms in Europe, 12,000 firms, and it's built to be representative for every country in Europe. The survey was run last summer, so it has a view on the dynamics over the pandemic, but it doesn't take into consideration the new challenge related to the war. We still think that it's quite important to look at how the firms were getting out from the pandemic, to see how the new shock will enter into the economy, and what are the vulnerabilities where it will touch. So what I will present now is actually a combination of things. I will present the results, but I will also bring some ideas on what we think are the challenge for the economy now. And everything is put in the perspective of a panel discussion where we wanted to have feedback and input at the local level on our understanding. So where do we come from? I think the Hungarian economy was, as like the European economy, we were coming out from the pandemic actually quite well, much better than expected during the pandemic. I'm talking particularly about investment and the corporate sector. At the beginning of the pandemic, there was a strong concern on mounting, coming NPL, very strong reduction in terms of investment. But what we saw is the capacity to quickly rebound based on very strong policy support. We looked in detail, looking at the firm level, what the effect of the policy support was on firm. And on the positive side, what we see is that actually firms used the pandemic as an opportunity to transform. There was some advancement in investment in digitalization that was moving a firm forward, having in mind that they saw that actually the new normal would be different, and then the crisis and the policy support were an opportunity for transforming. That was the situation up to the war started. Then the war is coming, the economic consequences are coming, the full spillover effect is not clear yet. And the concern is how much the potential vulnerability that they were embedded in the system because of this shock, capacity to react, but also very much dependence on very strong policy support. How much now the situation can evolve and how much the economy can withstand the new shock. So that's part of the challenge. On a policy focus, we remain convinced that investment is extremely important, investment that has a public sector component, but also a private sector component, having in mind the innovation challenge, the digitalization challenge, and also the green and climate transition. And I think Peter will present a few very interesting data on how firms in Hungary versus the EU perceive the challenge associated to the climate transition. I start with a few slides. So this is just to show what happened, the shock in terms of GDP, the capacity of the economy to rebound, very much similar at the EU level and at the Hungarian level. Investment as well, at the end, a good rebound. At the European level, it takes less than 2 years for real investment to get back to pre-pandemic level. And also in Hungary, we see quick rebound. That's pre-pandemic, pre-war effect. Now the new shock is also coming in. This is something interesting. If we look at the effect of the pandemic, in our survey every year we ask firms to forecast their expectation on investment for the year, and then the year after we can see what did actually firm do. What we see is that when we're asking firms to forecast their behavior for 2020 at the time, they were both at the European level and the Hungarian level. There was a strong concern. So firms were very much thinking, there were much more firms thinking to reduce investment. The realization the year after was less. So that's really the effect of the policy support. Everybody was very concerned. The policy support was coming, also targeting firms. The situation was not so bad. Firms were declining investment much less. And now the outlook, and again, it's the outlook before the war, but actually was much more on a positive mood in terms of investment dynamics. The policy support, I think what we have in the survey is also the percentage of firms that were actually recording sales losses during the pandemic, and we have a number for Hungary that is close to the European average of some 45%. What you have in Hungary is there is a group of firms that actually were expecting to have increase in sales through the pandemic. So there is a number of losers and winners in terms of economic dynamics. What I show here is policy support. So we define in the survey policy support, asking firms whether they received the subsidies, deferral of payments, or guaranteed credit, or everything altogether, or something else. What you have is in Hungary, you have slightly lower share of firms that received policy support. Mostly it reflects well enough the distribution at the European level, maybe with slightly less usage, actual usage of guaranteed credit. But in general, the policy support was widespread and relatively generous also in terms of firms that receive it versus the firms that had sales losses. But that's the same case at the European level. What we did was something that here looks a bit, here it looks just two graphs, but we did a lot of analysis actually at the European level and for the single countries to understand what was the effect of the pandemic on firms and the effect of the policy support. What we were trying to look at was whether the policy support went to, first of all, and you don't say it here, to zombie firms, and since it didn't go to zombie firm, it was designed not to go to zombie firms, so that's a good message. The second element was whether it went to firms that really needed it, and the firms that really needed it are the firms that were having sales loss due to COVID. What you see in the first graph, you see that it happened, that the distribution is more skewed toward firms that had sales losses, and very few firms that didn't have sales losses received policy support. So that's a positive message. It means it was well allocated. What is even more interesting is what it allowed the firms to do, and that's what you see in the other graph. What we find is actually that the policy support allowed firms to continue their investment projects irrespective of the sales loss that they had. So it actually shielded firms' investment plan from the effect of the shock. And that's quite good, and it's particularly true for digitalization investment. So what it meant was that the policy support was going to the firms most affected, and provided a possibility to continue to invest, transform, and digitalize despite the effect in terms of sales. So somehow was on the positive side. And why is it important? Because in fact, what we see is that firms expected COVID to have a long-term effect. So COVID was not only a short-term shock and then the world would come back to normal. COVID is expected by the firm to be an accelerator of transformation, and particularly an accelerator related to the digitalization. So that's the policy support that was allocated that allowed the firms to continue to transform and digitalize actually allowed the firms to move toward the new normal post-COVID. Now the question marks, and and actually here I think it's analysis for most of the people here in the room, because I'm just stealing from the Central Bank forecast. Now the challenge is the new shock, and I think the question mark that we have on the one side is what are the transmission channels, and I think it's really related to the inflation, the commodity shock first, the effect of inflation, the tightness also in the labor market that reflect on inflation, what will happen to quantity effect in terms of energy import, and the risk associated to the global value chain and increasing uncertainty, risk aversion, and the effect that all of these may have on investment. These are the challenge. The other challenge that I may point out is that at the end, the post-pandemic, so the reaction to the pandemic was good. So a lot of good things happened during the pandemic. Good in the sense the firms perform better than we originally expected during the pandemic because of the policy support. But what is not clear is how firms can behave in a normal environment without this policy support. So what we have now is a new shock, and at the same time we have pressures on top of the new shock, we have a pressure on maintaining all the policy support that was allotted. So the concern is how solid the situation will be. And I come to the last slide that I have, is that at the end, in this context, so coming well out of the pandemic, but the new shock coming, and the economy still needing to prove that can live with a normalization of policies. On the other side, we still have the mega trend coming that are the digitalization, the green transition, and energy security coming in. So investment becomes important more than ever, and how to keep it going is the challenge going on. I leave the floor to Peter for a few other interesting details.
Thank you, Deborah. I would like to continue with the results that we learned from the now 6th wave of the EIB survey. Each year, firms are interviewed on their investment priorities and their actual areas they did investment in. What we learned is that in the pandemic year, the investment profile and innovation profile of the Hungarian firms did not change considerably. We learned that the firm's investment share into machinery and equipment has increased and were slightly crowding out other areas of investment, but this is not a statistically significant increase. Software, IT, and website investments are concentrated in the construction and the service macro sectors, and the general picture tells a slight lagging behind of the Hungarian economy in terms of immaterial investments with respect to the European Union. When we look at innovation activity, the share of firms that report that they did global innovation did not decline during the pandemic. The type of innovation that looks at within company changes, processes, and new products, there is a slight change with respect to 2020 and 2021 wave of questions in Hungary. The innovation activity, probably unsurprisingly, is concentrated in the Hungarian manufacturing sector across large firms. The EIB survey asked firms what was their short-term reaction to the COVID pandemic. They were interviewed about three topics: digitalization, development of new products, and their reaction with respect to the supply chain. We find that the majority of the firm had some kind of a reaction to the pandemic in their strategy and their operations. The digitalization is the one area that stands out, both on average in the European Union and in Hungary as well. One question that we wanted to answer is that this new digitalization, how does it come with respect to the digitalization stance of the firms? We ask firms every year whether they have already adopted some industry-specific technologies. This will come in the next slide, like drones, platform technologies. And we learned that half of the firms that have already adopted digital technologies on extra increased their digitalization during the pandemic, while 40% of the firms, this is a small share of the non-digitalized firms, have increased their digitalization throughout the pandemic. In general, this action is very similar to what we observe in the European Union on average. However, the digitalization stance of Hungarian firm is somewhat lagging behind the European one. As I was mentioning, while the digitalization level is somewhat lagging behind the European Union in Hungary, the lagging behind is rather small, while in the European Union, average response to digitalization adoption is 56%. In Hungary, this is about 50%. However, what is important to note that the digitalization diversity is, in terms of sectors and in terms of adopted technology, differs from the average European Union firm. Hungary is leading in robotics, but is lagging behind in big data and AI adoption and in drone technologies. The survey also inquires about firms and their perception of transition risks and physical risks. the Hungarian firm profile is very similar to the one that EU firms report on average. There is a significant share of firms that don't consider transition risks or physical risks as a threat to their operations. About 30% of the firms consider transition risks as an economic negative outcome, and only about 20% of them consider transition risks as a positive opportunity to grow and to restructure the firm. As for the physical risks, on the negative side, small firms and manufacturing firms say that either they perceive physical risks as a low threat or they have already invested in to mitigate the economic effects of such shocks. In Hungary, a relatively low percent of the firms compared to the EU average, this is about below 30%, report that they have already invested into mitigating the physical risks of the climate change. However, on the positive side, the share of firms that report that they are planning to make such investment has increased considerably, around 10% from the 2020 wave of the survey to the 2021. This is rather positive news. As mentioned before, the key barriers that firms report in the survey to investment in Hungary and also in the European Union as a whole are the availability of skilled staff and the general uncertainty about the future. These are the investment barriers that are being reported year on year in most of the countries of the European Union. However, from the previous wave, the pandemic experience shows that the availability of skilled staff is relatively more cited barrier than before, and also the access to digital infrastructure is something, a barrier that firms cite more often. As a positive note, firms are less likely to cite availability of finance as a barrier to their operations in the wave 2021 than previously. As skill is one of the barriers that firms often cite, it's important to mention that since the investment share into skills and training has not decreased considerably in the pandemic, but the number of firms that invested in training has decreased not only in Hungary, but also in many countries of the European Union. This is especially worrisome if this decrease in training affects some firms more than others. And on the right-hand side slide, you see that investment into training on relative terms is higher across digital firms and compared to non-digital firms, and it's higher in firms that invested in green and energy efficiency than in others, which can exacerbate the gap between digital and non-digital firms and already green firms and others. This can add to the increasing gap between good and not so good companies. As a conclusion slide, I would like to point out that, as mentioned before, the Hungarian economy bounced back from the pandemic in a very good shape. Investment increased relatively early, but there are still pockets of investment where the country is lagging behind. These especially are ICT skills and R&D. These could, focusing policy on these pockets of investment could increase the resilience and help future growth in the country. And as was mentioned before, EIB is partner in all of these investments for the country to move forward. And thank you for the attention.
Thank you, Ms. Revoltella and Mr. Harasztosi, for these comprehensive presentations. And as final speaker, before we get into the panel, I ask on stage Mr. Tamás Nagy from the Magyar Nemzeti Bank, who's going to deliver a presentation on green finance activities.
Thank you very much. Dear Madam Vice President, dear Deputy Governors, dear colleagues of the EIB and of the National Bank of Hungary. In the next 20 minutes, I would like to summarize the progress we made in the recent years in terms of green financing, how the National Bank contributed to these very first steps of greening the financial system. I think to start with, it always worth to put our position into the international comparison in terms of sustainability. This first chart shows the so-called ecological balance, meaning to which extent we are overusing or using our resources or natural resources. And here you can see that we are in a rather good position, but still we are overusing our natural resources. We are in the 5th place among EU members with negative balance. But if we have a closer or longer look on a longer horizon, we see that in the last 50 years, this was the situation. And as you can see, in the last 50 years, there was always deficit in terms of ecological deficit. And if you recall the long-term GDP performance of the country, it moves very much in line with this performance. So the message here, the first message here, if we would like to continue our convergence to the European Union or to more advanced countries with a higher than European average GDP growth, we should really focus on this ecological deficit, that this should be lowered with higher GDP growth in the future. Of course, all the countries and the European Union itself has quite ambitious targets in reducing this deficit and setting very ambitious targets. Here we have our own national plan, the so-called national energy, the climate plan, which goes for the next decade and aims to reduce the emission of greenhouse gases by at least 40% compared to the beginning of the 90s. And of course, we joined the so-called European Green Deal program till 2050 with an even more ambitious target to go for a zero net emission in terms of greenhouse gases by the end of the 40s, beginning of 50s. Of course, every transition in the economy, and this time in terms of transition to sustainable economy, it has a huge cost. Of course, we find a lot of estimations which we can calculate the European and Hungarian investment need. Here we use the European and national plans forecasts in terms of investment need, and here you can see that even in the next decade to meet the national targets, we would need investments in terms of 16-17% of the GDP. And if we look forward for the targets till 50, we would need to invest close to 50% of the current GDP to reach these very ambitious targets. Of course, financing is always a question. There are dedicated funds from the EU and dedicated funds from the national budgets, as always. But if we add up these funds, we still see a so-called investment deficit, meaning the part which the capital markets and banks need to fill in the coming decades. And if you look to this financing deficit means something challenging to fill. But it's as it was already said, it's always an opportunity. So for the next decade, this deficit is around 5% of the GDP, close to 3.5 trillion in terms of financing from the market, and for the longer period, it's around 15% of the GDP. To make it more understandable for bankers to us, this is around 30% of the current corporate loan book for the next 10 years, and it's around 80% of the current corporate loan book till 2050. Therefore, it is very much important to drive this transition, to make the change in mindset of banks' mindset in focusing more on green finance, in providing these funds to the economy. And here, of course, the National Bank plays a crucial role. It was already mentioned by Deputy Governor Mr. Virak that the National Bank plays a crucial role, and I'm happy to recall that we are the first central bank in Europe receiving a green mandate, and we are really using this mandate for the good. And here we summarize the main measures in terms of regulation, in terms of supervision, in terms of capital requirements and monetary policy, via which we can boost this green transition. And of course, our own operation is also in a transition. In terms of micro and macroprudential policy, we are really trying to boost the funding of the banking sector via the so-called mortgage funding adequacy ratio, already implementing green aspects. A big and leading measure is really the capital requirements, the green capital requirements, green capital relief. I will talk about it later. And of course, the monetary policy, where Mr. Virak already mentioned two important measures, the green mortgage purchase program and the green home program. I will talk about it a bit later. Here I would give a brief promotion to the latest report of the National Bank, which was published yesterday. This is the Green Finance report. This is the second edition already. To compare it with the first edition of last year, so last year we really tried to lay down the fundamentals of green finance, and I'm happy to report that the report said that we made huge progress in the last year, that the sector really turned to green financing, and also the colleagues of the National Bank try to boost this report with new aspects. I would call to attention to one important message of this report, and the rest I really recommend you to read. The one new element of this report was the long-term stress test, which colleagues made in this report. A stress test till 2050 for the banking sector, and it really showed different scenarios. And of course, one of the scenarios was doing nothing, and the other scenario was an ordinary transmission in the next decades. And doing nothing has really costs. What costs can it have for the banking sector? Colleagues calculated approximately an NPL increase of 500 billion HUF in the next decades if there's no measures implemented. This 500 billion HUF of NPLs means 5 percentage point additional NPL for the banking sector. So the credit risk, the climate risk can really be transformed into a negative impact in the P&L of the banking sector. Coming to the corporate sector and capital markets, the first results of last year, because I said we made huge progress. By end of last year, we approached green financing of around close to 300 billion HUF. Time-wise, we can say that we reached 10% of the next decade. I showed this investment deficit in the previous slides. So compared to that, time-wise, we are more or less fine, what we have achieved last year. And this was really triggered, as I mentioned, by the capital, green capital relief of the supervision. You can see on the right-hand side that the program was really broadened step by step. First, it was only available for renewable energy and green bonds. And now, as you can see, this year we arrived at the commercial real estate sector, which is one of the most important part of banks' corporate loan book. And we are happy to see that it is not only the National Bank which adopts green frameworks, but now the biggest banks I mean, the biggest commercial bank in Hungary, adopted in just a couple of weeks ago its green loan framework. OTP has now its green program for the corporate financing, and also the Exim Bank has adopted its new green framework. And to add to this, the National Bank program, the green mortgage bond program, has also its positive impact on mortgage banks, since all the mortgage bank has now its green program in issuing new mortgage bonds. All these steps are very much needed, and this can be, let's say, very much shown by the so-called bank carbon index and the development of this index. In the recent past, we were always focusing on access to finance, especially in case of SMEs, and we managed via the Funding for Growth scheme to give the needed access to finance for the corporates. But at the same time, if you look at the development of the bank carbon index, it was rising in the recent past. So we were happy that the loan dynamics were there, but the carbon index increased at the same time. So therefore, in the past, we still have to focus on access to finance, but really have to change also our mindset that we should really focus on access to green finance and access to sustainable developments. In terms of volumes, you can see that in the last year, the green loans, corporate loans, more than doubled and reached more than 200 billion HUF. What does it mean in terms of total loan stock? This is currently around 2%. So we are starting from very low basis. There's very rapid growth, but the chart shows that we should really continue on this way, and we have to even speed up the transition. Besides the lending, there is also the bond program of the National Bank, which initially did not include any greening aspects, but companies realized the change in the investment need when they are issuing new bonds. And we are happy to say that in 2020, in August, the first corporate green bond issuance happened via this program. And when the program ended last year, we have seen 16% share of green bonds in the total program. So we are happy to see that companies really turned to sustainable bond issuance. And having a look on the green part of this bond program, we can see that it was mainly connected to the most polluting sectors of the economy, to real estate activities, to construction and manufacturing. So we see that the sectors which are really accounting for the increase of the bank carbon index turn to green, and we hope to see further progress in this field as well. If you add up the total green capital market, we see again a nice increase last year. But if you have a look on the ESG share in terms of investment funds, especially compared to the EU share of green part of the investment funds, we see huge potential to further increase the green bonds and the green capital market assets. Turning to the household sector, and here I'm happy to say that the National Bank of Hungary has the best housing report among central banks, and I would like to give some messages of this report, which is to be published in the mid of May. Of course, we are also focusing in this report on the green aspect, and one of the main findings of this report is that if you have a look on the stock of the residential properties, we can see that the greening of the residential properties is happening in a very slow pace. In the last couple of years, we have only seen a low share of very energy efficiency properties arriving to the market. Although there's a strong need for making the residential property market greener, since it is accounting for 1/3 of the final energy consumption of the total economy. How can we boost the renewal of the and the greening of the stock? Of course, via new developments. And here you can see, unfortunately, only for Budapest, but for Budapest you can see the new developments and the energy efficiency of these programs. And as you can see, as time goes by, the new developments are getting more and more green. We have calculated, let's say, the green premium in terms of pricing in new developments. And as you can see, if you would like to have a more energy efficient apartment, for example, in case of Budapest, you will have to pay an extra premium of around 6%. So compared to the CC energy efficiency, if you would like to have a BB, then it will cost you additional 6%. And to finance this, let's say, green premium, unfortunately, banks are still not offering green products. So meaning that the green hypothesis is not, let's say, visible currently in banks' pricing, even though there are more and more broader literature saying that the credit risk of green housing is lower than in case of non-green housing loans. And this was one of the reasons why the National Bank introduced or launched the already mentioned Green Home program. And as you can see, in the last couple of months, new distributions, since October, or practically November, this program really kicked in the door in terms of new housing loans. As you can see, as we are approaching this year's new disbursements, the higher the share of the program. And the latest data we have is March, and in March we have seen a 90% share of the Green Home program in terms of newly issued housing loans. And one of the reasons was, besides the successful changing in mindset, is the difference between the interest rates offered by these green loans via the increasing interest rates on the market-based loan products. And this was the reason why we have seen a significant jump also in the newly built apartments, newly built detached houses. Here you can see the results of the program. More than 50% of this program financed newly built detached houses, and only 1/3 financed finished or semi-finished apartments. When we started the program, and this is the last slide of mine, we started with a two So in 6 months' time, with another 100 billion forint, and we have tightened also the energy requirements from the 90 kilowatt-hour to 80 kilowatt-hours. And let's say despite this, or even using this 100 billion half, banks already reported that after a couple of years, they utilized all the additionally allocated amounts, and therefore we see that the program was very much successful. And since it is a stable part of our monetary toolkit, and we have the green mandate, really have to examine how to continue, under which conditions we can continue with this green program in further supporting the transition of the housing market. So thank you very much for your attention.
Thank you, Mr. Nagy, for this comprehensive presentation. And after these remarkable speeches and captivating presentations, we continue with a panel discussion titled Financing the Digital and Green Transition in the Corporate Sector. We have excellent speakers coming to the stage, and I'd like to ask to the stage again Mr. Revoltella as moderator of the panel, and as participants, Mr. Zoltán Lahocki, Chief Advisor to the Chairman at Granite Bank, Mr. András Puskás, Chief Advisor to the Chairman at Magyar Bank Holding, Ms. Anita Fürstenberg, Director of Operations in Central and Southeastern Europe at the European Investment Bank, and Mr. Gábor Gyura, Head of Sustainable Finance at Magyar Nemzeti Bank. I give the floor to Mr. Revoltella and their speakers now.
Thank you. Is it working? Yes. Sorry. Okay. Thank you very much, and I'm really happy to have the opportunity to chair the panel, because after we spoke a lot also from the EIB side, we learned a lot from the Central Bank side, and but I would really like to have the feeling more on from the market side on how do you perceive the situation and the challenge for the business sector, for the financial sector in Hungary in this moment? So I would like to start. We prepared a number of questions and many questions, and we have 1 hour, which is a good 1 hour plus Q&A, so it's good, but it's not enormous time. And I will try to bring together a few of the elements. And I would like to start actually from one of the slides that Peter was showing when we were talking about the impediments. So firms telling us which are the key impediments in the countries. And skills was coming out, and is always coming out at the European level and at the Hungarian level as one of the main impediments. We also see that we have different elements coming together. We have a tight labor market, even if there are some differentiation in the labor market. There are issues on specific skills missing. What do you think, what are the concerns that you see? And I don't know, who wants to start with that? Maybe Gábor? Oh.
Yeah, more than happy to start. So I agree that availability of skills and expertise can be a barrier for green transition. I think it's useful to mention both corporations and SMEs especially, and also the financial sector. I think a lot of surveys, not only the EIB surveys, confirm that this is the issue, and especially the SMEs, it's a challenge that they have, in comparison with more mature markets, less awareness about, for instance, the importance of climate change, what it brings, transition channels in which it's influencing the markets. And we also have evidence from the banking sector that it's a challenge to have sufficient number of skilled experts to offer green loans, to make green investments. Actually, the Central Bank has been doing surveys, and both last year and the year before last year confirmed this. The good news is that I think we can do a lot in terms of increasing awareness and improving availability of skills. Also, the National Bank itself is investing in financial education together with university partners. We are offering trainings to banks, and many banks are now, an increasing number of banks sign up to these trainings. And I should also mention here that the Budapest Stock Exchange is now also enrolling, using EU funds, new training programs for SMEs about ESG, climate change and sustainability. So I think we can really improve this challenge with expertise.
Zoltán, you want?
Yeah, I think that companies that are willing to invest in Hungary can cooperate with the government or educational institutions. This is what different government agencies are doing now when a new investor tries to come into the country. And this is very good. I think education should be one of the main focuses. Education, education, education. Generally, government should follow the old proven process, regulate and educate, and then analyze results and fine-tune targeted programs, and then regulate and educate again and repeat forever until it changes. So education, I mean, is really one of the premier factor of this transition, digital, green, and other transitions, technological transition.
Andras?
Yeah, nowadays we can hear about more and more of the slogan, software is eating the world. So regarding to FinTech Job Report 2021, the FinTech industry is now 38% of the banking sector versus 3% in 2010, and 80% of the jobs of FinTechs are roles of technology companies. I hope that most of you heard about our project in the Hungarian bank holding called Foundation, where we decided to build the largest digital bank in the CE region. So yes, we also see the obstacle in front of us. There are currently 44,000 IT professionals missing from the market all over, and we compete with the Silicon Valley big techs as well as technological company. From our side, I believe that we won building the second largest bank in Hungary and able to create a value proposition that will attract these kind of talents.
And Anita?
Yeah, I mean, from the survey, we see that 69% of the firms in Hungary considered availability of skilled staff an issue. The positive thing is that you saw that the workforce was resilient enough to do the rebound that we saw after 2020. So the managers have done something right in keeping the workforce loyal and productive. I think in the future, as we're going into a multi-crisis scenario with the Ukrainian war, with the looming climate crisis, importance will be to retain staff skilled, motivated, and maybe it's not just over the salary level. It is about keeping people competent in finding the right solutions for the current crisis at hand and to avoid making the mistakes, and to invest in the skills that are needed. In particular, when we see about climate change, the EU taxonomy, this is extremely complex. Also, the availability of funds, of grants, will become more complicated because you need to know which sources to tap. And we as EIB, together with our stakeholders in Hungary, will try to assist in providing targeted advice and to help to have this knowledge transfer, because I think this is going to be very important to help especially the small and the mid-sized companies to address these issues and then to disseminate this knowledge further down the line.
Okay. And the other thing we were talking, I think we were talking about the transformation needed on the digital and green transition, and what does it take for the economy. That means a lot of public and private investment to come. What are the main concerns? So, what are the most important investment that you see in the country? Where should really the advancement, the process kickstart? What are the most important things that need to be done at the Hungarian level? And how do you think that the public and private sector can work to support it? And I go with you.
So can I?
Yeah.
So I think that the country is now really an assembly country. A lot of investments come into the car manufacturing industry and similar type of industries where the added knowledge is very limited, because this is not the requirement of the investors. The investors' requirement is just to produce something cheap. And this is, I think, not the way of our future. So we should, again, invest into education, really produce a skilled workforce who are capable and able to work on a more demanding fields. So this is what we have to focus on.
Andras?
Yes, a change usually occurs when there is an imminent need. So, for instance, shoes are too tight, or there is an obligation to do something, for instance, paying a new tax. So we saw that the banking sector, even the Hungarian bank holding itself, substantially improved its processes during the pandemic and introduced online account opening and supported clients to remain operative during the lockdowns. We must admit that digitalization is quite important in our processes as it saves time, hence lowers our cost and result in lower fees towards the clients. However, when it comes to important decisions, where, for instance, company expansions, merger investments or personal investments, purchasing a new house or flat, many clients still need a personal assistant. And these are usually milestones in their life and not a choice of a flavors in an ice cream parlor. So there is also an increased need for digitalization, automation in process of the companies. So therefore, we have seen many new challenges, for instance, financing issues because of the new technologies and the volume of the developments, and the lack of professionals, as we mentioned earlier.
Benita?
Well, we often use digitalization, green economy in one sentence. We saw from the survey, actually, digitalization is quite okay in Hungary. In view of the current situation, I think the main problem is energy and how to save energy in view of what might be coming our way. So if you combine this, clearly digital systems that make you smarter in knowing how much energy you consume, in where you can generate savings, also in the home renovation, you know, to have really a good picture about what is the best time to use energy, what is the cheapest price for the energy, how you can isolate best. I think these are the investments that to me are currently a priority, because the next winter is coming, and the more we can save energy, the easier it will be should there be a problem with the energy supply.
I fully agree with the importance of energy, so investments in energy, so moving away from fossil fuels to renewables, and Hungary has been doing well in that respect, but can we speed up that transition? And banks have been very important players financing the scaling up of renewable energy capacities. It's a big challenge whether we can really speed that up. Energy efficiency, obviously, this has really been, I think, a challenge throughout Europe, but also in Hungary. This is also what Tamás mentioned in his presentation, that this looks like a low-hanging fruit, especially with buildings, but still the breakthrough hasn't been achieved. Maybe this current very sad pressure what we all have now because of the war can make it possible to speed up investment into energy efficiency so that we can just reduce our energy consumption. And maybe let me also mention agriculture and food supply. Again, this is of course not independent from the war. I think in Hungary, probably very few would have assumed that there could be problems with food supply in Europe, and especially beyond Europe and outside Europe. And now I think with the war in Ukraine, we will probably, of course, increase the pressure with food supply. And I think the big question from sustainability perspective is whether we can make sure that there is a constant, maybe increasing supply of food for a growing population, but in a sustainable manner, which will make it possible also for later generations to use or soil and all these things. So green agricultural practices, again, these need investments, and banks are very important financiers of those investments in the food industry as well and agriculture.
If I still can tell some words about digitization. So when Granite, my bank, started 10 years ago, it was already a must for us to start digital, because we have just not enough resources to invest into acquire or purchase an expensive branch network. And therefore, we turned immediately into digital. And we then try to build up our digital business model. Of course, this digital business model works first of all when we are providing services to private individuals, when we are servicing corporates that we do in a traditional way. And this I would like to turn to the question of regulation, because we could be as digital as the regulation allows us to be digital. We could be as green as the regulation allows us to be as green as possible. So the role of the regulators are really very important in this issue, because the market does its job when the corporates come in and they are forced to be green because otherwise they cannot sell their products. This is really the market influence. But on the other hand, and in the banking sector, for instance, the regulator should allow us to be as adaptive as possible.
And I like the fact that you get back to regulation, because it allows me to think to rephrase a little bit my next question. And I think we saw a lot, if we think at the green transition, we see very much, we see also that there is a big difference between large and small companies. So small companies tend to have less awareness of what is coming, how the transformation will affect them, and how to move forwards. On the other side, there seems to be pressure sometimes, and you were speaking about energy efficiency and energy efficiency investment. You may invest in a technology, is costly, but reduce your cost, but you may not know if you are not aware of what is happening. On the other side, the new technology can also add to the needed transformation, can add to sort of inflation of your cost. So how do you think SME in Hungary are prepared for the transition, and what can be done? And maybe I go back to you because of the work that you're discussing about.
Yeah, I agree. I think energy efficiency is a perfect example that green does not always come with higher costs. It can be, I think, good, of course, for your ongoing expenses every year. So it's a good investment. It can pay off fairly well, depending, of course, the energy price you have to pay. But I agree that with many other, let's say, green investments, it's not obvious that this will pay off. Again, a big question is whether the company can charge higher prices for the better products, which are greener, which are, for instance, less demanding for the environment. And again, this is a question of the awareness of customers. And again, we have to mention that Hungarian customers seem to be a little bit less willing to pay more for green products compared to, again, more developed markets. But let's mention something more positive. In addition to energy efficiency, resource efficiency in general, I think it's very important. And again, probably there is room here for increasing awareness among SMEs, what kind of resource efficiency improvement they can do. I know that the EIB is also working about circular economy measures. And so it's not just climate and energy, it's also circular economy, which can be good for the environment and actually can come with lower costs for SMEs. So probably that's, again, an area where we could do improvements in Hungary.
And Anita, he called you in the panel, so I just pass it to you. What on our side? What's on the EIB side? How do you look at SME and the green transition?
Well, I think in the future, in the medium term, companies will not have the choice to be green or not green. The choice will be green. And we are trying to facilitate this process, as the big companies are already doing. They have very specialized department to define actually what is green, because this is not very simple. There is a lot of calculations to be made, whether it really is a product that is circular, where there is actually not a negative impact on the CO2 emissions. And you need to have this sort of green stamp to have access to funding from, privileged funding from the Commission or from the banks to go under these programs. So what we are doing at the EIB side for the SMEs, because obviously we cannot advise individual SMEs, but we try to disseminate the knowledge about the taxonomy, which is actually the instrument the European Union has to define what actually is green and what is not green, in cooperating with the government, the respective ministries, and also the national promotional banks to design their systems where they disseminate the funding in their green programs to the SMEs. So we have experts that help and we have also for the commercial banks to help design these green products with simplified procedure, with simplified communication to the SMEs so that they can take advantage of the financing that is now available to them. And I think it has to be a collective effort of all of the financial actors in the country to make sure that this knowledge reaches not only the SMEs but also the households fast.
Andras.
Yes, I absolutely agree. From our perspective, the cost of the green investments is very high for SMEs, and the break-even can be calculated usually on longer term. The financing can be challenged without subsidies if the break-even is longer than 5 or 7 years. The question is who bears the cost of the transition, the company, the government, the financial system, or all of them. It's increasingly heard that the EU will provide significant subsidies for the transition, which will help SMEs in the green transformation, and it will reduce their costs as well.
I think it's clear that because most of our SMEs are too small to afford such transition costs, this is essential that such preferential supports like given by the central bank should be available in the future as well. So this is really a very good example, and it's really a good job what the National Bank did so far or have done so far. But of course, I think this is not a central bank issue. This is an economic policy. It's a government issue. So the government should be absolutely the forerunner of all these measurements. What now the central bank is doing, first of all. So I think in the future we have a new government. The cooperation between the government and the central banks will further improve, and the outcome of it will be really supportive to the SMEs, capital supply, in helping and supporting them in green transition.
Yeah.
Can I just get back to Anita's point, which is really important. So in Hungary, this is also something Tamás mentioned, banks can enjoy more favorable capital requirements for green loans, and the EU taxonomy is the basis for the definition for green loans. And actually, we know that this is really, of course, a challenge both for banks and also for SMEs, the application of the EU taxonomy, because it's so complex. Needs a lot of information, data, certification, things like that. So I haven't known about this EIB facility, even though I tried to follow the activity of the EIB. So I'm not sure if it's enrolled to Hungary as well, but if it's available to Hungarian banks or SMEs, then sounds like a great news, because that could really facilitate green lending in Hungary for SMEs in line with the EU taxonomy.
I mean, for the SMEs, normally the instrument that we have in the countries is our global loans. So we have financing lines that are channeled through commercial banks to the final beneficiary. And we used to have this only for SMEs, and we are now trying to have it more focused for green, for energy efficiency or whatever. So we can define, and then depending on the needs of the financial intermediaries, we make available also some advice in structuring and helping to define the reporting from the financial intermediary to us.
There is so I have two questions that I wanted to raise in terms of financial sector channeling funds to investment. So what we see in the survey is that firms complain slightly more than European ones. So the percentage of firms that are credit constrained is slightly more than the average at the European level. But the situation seems to have been improving in the past year. And on the other side, when firms complain on access to finance, it's mostly on collateral requirement. Do you see this or not? Is it something that you see in the margin? And what are the concerns in terms of access to finance for companies? And maybe now I start from the bankers.
Yeah, thank you. I think it's essential to have a green financial framework in case of green investments. It means that the adequate motivation system for the whole financial segment is necessary. For instance, institutional guarantees, capital requirements, regulations, subsidized loan products, etc., which can lead to higher willingness to support these kind of investments. In parallel with the start of building the most digital bank in the region, we have begun to put very serious resources to laying the foundations for green financing. We have created a separate ESG department which coordinating and forcing the creating of the green products and the entire risk framework for the bank to meet ESG requirements. We would like to increase the ratio of the green loans and in the same time to start the green knowledge transfer for our clients, which is essential to increase the green investments, we hope so.
We participated in the Central Bank's green loan housing program, and it was extremely successful. And this shows really the essence of this green transition, because having this resource available, the developer changed their technical requirements, the investor changed their needs. So this has completely changed the market into a greener direction, which was really very good. So unfortunately, these resources are limited, but hopefully this will change and maybe continue in the future.
Gabor?
Yeah, maybe just very briefly. So of course, I think central banks can help with access to finance for SMEs, especially if there is some, I think, dedicated purpose. I mean, with sustainability, which I think there are very good reasons to believe that it's also good for financial stability. And I think we have been implementing many programs helping access to finance, especially to green finance in Hungary. You also mentioned collaterals. I haven't heard about this problem specifically with green finance, but I think this brings us also to the point also mentioned by András, I mean, guarantees. Of course, central banks cannot provide guarantees for loans. It is, I think, something for governments or for institutions like the EIB or EIF. I agree that probably guarantees could still help, especially with those loans or, let's say, loan requests, which might be a little bit doubtful, too risky for a prudent lender, even with, let's say, favoring green financial regulation in place. So probably guarantees or any kind of credit enhancement solutions could play a role again to speed up transition and to scale up green finance in Hungary and also probably also beyond Hungary in the region.
Anita, you want?
Actually, under the current circumstances, green finance might be facilitating more access to finance of the companies, because the biggest problem that the companies are facing right now is the uncertainty triggered by the geopolitical situation and the uncertainty about the energy prices. So clearly, the less or the more control you have over your energy consumption, the better your business case will be, and the more likely you will get a favorable decision from your banker. And clearly, with this situation that is now prevalent, the access to finance might be constrained for the companies that are particularly reliant on fossil fuel resources, and they don't have the ones that don't have a plan B. Yeah. Now, I think for these companies to have transformation plans to become green, and as I said, there is help available for the big companies, but also for the smallest via the promotional banks to help in these transformation plans is essential. We have, for example, since the beginning of this year, when we analyze our projects, we also look at the sustainability plans of the company. We don't only look at the project that we finance, but at the company as such. Has the company plans in place to go into sustainability activity? I mean, they don't have to be green from day one, but they have to have a plan to adhere to the EU rules and to the lower carbon exhaustion in the next years.
Yeah. That's also on something we didn't present it, and was not part of the presentation, but we were asking actually SME what are the main impediments to invest in the green transition. And what comes out is, on the one side, really for SME, it's regulation. So uncertainty about regulation and taxation is a problem number one. Awareness, they just don't know. They don't know how to tackle it. And also skills are very important issues. And then it comes access to finance or others. So at the end, there is a full element of first of all, clarity of the direction and regulation and taxation, etc., and then the knowledge and skills that is preventing the transformation. On that point of view, I think also data come in, and I think the work done by the Central Bank on having a full understanding of what's happening, it also brings a clarity on data and understanding. And how important are data, Gabor, in the green transition?
That's an easy one, so absolutely very important. Both, I think, on a macro level and also on a micro level. So yes, our green finance report was just published yesterday, unfortunately only in Hungarian first, but it is being translated into English. And even banks told us a couple of years ago when we made up the idea to have some report that it would be so useful even for banks to see where the whole market is going. Because, of course, even without knowing the exact numbers of their competitors, but knowing how big the Hungarian green finance market, what kind of segments are growing is helpful for the planning of banks themselves. But that's the macro level, and we provide a macro level picture in this report. But I think data is also very important on the micro level for green lending or for ESG investments. And yeah, I agree with it. I think it was also already mentioned today. It's a competitiveness question. It's becoming more and more important for SMEs to be able to become suppliers, especially of larger corporations which are listed or which are more advanced in terms of ESG. And for that, of course, they will need to have data. They will need to measure for instance, their alignment with EU taxonomy, their carbon footprint, all these things. And let's admit it, very few Hungarian SMEs are ready to do that, and it's costly. But certainly it's really an investment for them to be able, again, to do business in Europe on the long term, and probably also to have access to green finance, because I think these are the, let's say, data points which will their partners, business partners, will increasingly ask, and probably these are the data points which will banks or fund managers which will need to request in order to provide them finance for their green activities. So it's a good investment, I would say.
Zoltan?
I think that the reporting is a burden on SMEs. So it's absolutely a burden. So if we want to have good quality data on a regular basis, we should, again, support them or promote them to be able to and capable to provide these data, because data is really the basis of all economic decisions. So without good quality data, we don't see the real picture.
Andras?
Yeah, ESG framework and ESG reporting requires different perspective and the whole transition within the entire company. At the beginning, it has costs and requires sacrifice from the leaders and owners of the company. In case of SMEs, it can be challenged, but in MKB and in the bank holding, we see a lot of good examples where the SMEs see the opportunity in being green. And at the same time, it would also be very important for banks and to have for banks to have access to public databases that would be very useful for green financing, as they could be obtained not from clients individually but from a central location. This would save a lot of time and energy for everyone, especially for SMEs. And last but not least, clients would not be dissatisfied with the many data requirements.
Anita.
Well, of course, data is essential to then also check whether the green investment actually is green. And this is the whole point, because if you get money to have, I don't know, insulation in your home, and then you take the money to do something else, as also happened in some of the programs, then obviously there is no positive effect on climate change. So this will, of course, always be there with green loans, a certain monitoring afterwards. But what we can, I think, what we need to commit as the financial sector is to make this process simple, easily understandable, and without excess costs to the end user. So, for example, for the home renovation program that we are doing together with the Prime Minister's office, we are helping them in advising in developing a calculation methodology for energy efficiency and renewable energy measures, so that they can give the clear target and put that into one number, what is expected to yield from this measure. And of course, we are in early days. There are a lot of green loans out there. The taxonomy is a book like this. So for every of these measures needs to be a process defined in the background, and there will be advice needed for the actors to do this correctly. But I don't think really there is an opt-out mechanism of greening the economy. And the faster the companies are, the better they will be able to compete in the European scale, because the companies that will lose out in 10, 15 years' time will be the ones that haven't done this transformation process, because in particular when the resources that they need to produce are going to become scarce. So actually what we're seeing now with this energy crisis is what we probably without the war would have seen 20, 30 years from now, when the fossil resources would have been depleted in a natural way. So it actually makes us now react faster, and maybe this is also the opportunity to make this transformation in one go, fast, and then afterwards we are a bit more considerate about the resources that we consume to make our products, and that we reduce also the waste of energy and the waste of resources, and have a more circular economy evolving from that, that will make us more competitive on the global scale.
I think there is the Vienna Initiative. I don't know if people know what it is. It's a framework that brings together central banks, commercial banks, and institutions that are active in Central Eastern Europe. And there we are launching a working group bringing together all these partners. And coming from the bank, there was a very strong request in trying to develop a unified questionnaire for SME in terms of the green standard, green definition, etc. So something I found it very interesting that it was coming from the business, where banks were saying, let's get together, let's not ask in 5 different ways to the same client, and then each one of us has to explain what does it mean. Let's explain it once and we all use the same version. So that's something where probably it's really the integration of various aspects, the commercial banks, the regulators and institutions that can play that can play a role. And also data information will be something crucial going forward. I have another question, and let's switch a little bit the topic. I go back to the issue of finance. We talked a lot about bank finance, and the question is more about other form of finance. What do you perceive for the, in general, for the digital and green transition, and for the green transition only? Do you think that we need more, not only the finance, but also venture capital, private equity, the innovation part also in terms of the green transition to be financed, or is not a top priority? What, Andras?
I think, yeah, in case of SMEs, the venture capital and the private equity funds for that purpose is probably less relevant as they are too small. Size also matters when it comes to investments. For instance, it's easier to invest 1 billion Hungarian forint into one company than 1 million Hungarian forint into 1,000 companies because of the excess of risks. Return for all companies. Bond funding for growth scheme is preferable, and the banks like the framework. In case of BFGs, economies of scale can be a problem because the starting costs are quite high in this product. On the other hand, there is also an investor base need for the green bond. Investors are reluctant to achieve lower returns on a green bond unless they have a regulation to follow. Hence, the motivation, the driver for greater willingness to invest is desired amid the current interest rate environment.
Zoltan.
I think the fund generation through bond issuance sees over the past decades were not very much in Hungary. The big player issued bonds like such as MOL or Vrikta or else, but it was not relevant to the SME sector. The SME sector, as András told, is just too small to prepare themselves for a bond issuance. We should know that the bond issuance require a lot of documentary work. It's costly, a lot of legal work, different audits and so forth to prepare a good presentation material for investors. This is what very few of the Hungarian SMEs can afford. On the other hand, I think that the bond program, what the National Bank launched or operated over the past 3 years, was really very important in respect of building a new capital market in Hungary. And this was not just an important step, but this was a very important knowledge transfer to the customers, because they first met how to arrange and organize a bond issue. And as the interest rate environment changes substantially, and we think it will increase, there will be no further cheap available loans in the market. So maybe the market players should think about what alternative fund generation methods they will use.
Anita?
Well, EIB we were the first and we are the biggest green bond issuer. So clearly there is a market where you can source cheaper funds via issuing green. Now I agree, Hungary is a small place, there might not be many players around. Nevertheless, I believe, and I repeat what I said before, to know what is actually green is very important for all economic actors, because as soon as you have a project and you can give it a green stamp, this might be used to get favorable financing. And while the market might not be there, you could think about, green securitizations of loan books of banks. Once you have you know, once you know your asset class and once you know there is this pool of asset classes which also is being used by the National Bank, you know, financial engineers will be able to do something with this and then channel the benefit to the final beneficiary. But what currently I think is more the problem is that people don't know whether it's green or not, and then and this process is very cumbersome. So this is, I think, the first thing to tackle before thinking about, you know, complex financial structures.
Gabor?
Yeah, I agree, of course, that in Hungary, especially, of course, commercial banks have a by far much bigger role in financing the transition. But I also can agree that the fund market is also important, that they can play a complementary role. Yes, in Hungary, the private equity market is really small. Especially venture capital funds are small, but they can play probably an increasing role. And also now there are good signs. They are now getting familiar with the EU taxonomy, because of course innovation is very important for green transition. And even if we have a small venture capital fund segment, it can grow, and especially it could play a very positive role in financing early stage companies who are innovative in green transition or digitalization. So it's certainly, again, an area in Hungary which could improve. And let's also maybe a little bit mention mutual funds, which of course is a much bigger segment in Hungary. This was also mentioned in the presentation that in Hungary the ESG market of mutual funds is still very small compared to Western European markets, but it's growing. And we also can perceive that investors are increasingly interested in investing in ESG mutual funds, which is also very important because this could be very natural investors in green bonds in Hungary, either issued by mortgage banks, I mean green covered bonds, or corporations. In Hungary, in this last 2 years, of course, the central bank was one very important player in the green corporate market as investor. Yeah. Banks were the second largest investors of green corporate bonds, and mutual funds could be the third biggest category, along with insurance companies. But now in Hungary, most of these ESG mutual funds are mainly buying foreign assets. So again, that's a area in Hungary where the Hungarian market could grow, and actually they could be very natural investors in green assets issued by Hungarian banks or Hungarian corporations.
I now have a whole new chapter to open that is actually related to the consequence of the war and what you expect for as a major challenge. But before doing that, I would like to ask from the floor if there are questions, or at least prepare questions for when we finish this round. But if there is any question already now, I would be happy to take. Other, yes?
Now? Okay. So first of all, thank you very much for the very interesting panel discussion. I would like to raise one question linked to the digital transformation in the Hungarian economy, because I saw a very interesting chart, maybe in your presentation, Deborah, maybe Peter's assessing the digital transformation in Hungary. And for me, the interesting result was that there are some fields where we can say in Hungary we are okay. For example, in robotization, our numbers better than the EU average, but there are some fields where we are lagging behind, especially in case of the usage of data, the big data technologies. So my question is that what are your main points to the policymakers to step ahead in the field of big data technologies? Because I have to say that we absolutely agree
Maybe because I think I can take the first thing, even if I'm in the chair, just because the graph was coming from our analysis, and I don't have I start saying I don't have a conclusive answer, but I tell you what I think, and then others maybe may add on that. What I saw in the graph, and I'm also very interested. I was also very interested in looking at it. What you see is really the robotization is going fast. Robotization is coming, of course. I think a lot of large companies, tension in the more pressure in the labor market, more investment also with the maybe after the COVID pandemic, etc. But also before, the robotization goes very, very fast, and that's one of the elements, and it's very much on large companies, global value chains that are advancing very fast on that, and also very much related to, as I was saying, the tension in the labor market. There is the other part of the story that is platforms. I think it's one that was quite low, Internet of Things, etc. There you really need a complete transformation also of the way in which the firms are organized, the way in which they learn. You need the proper infrastructure, you need, as you are saying, the regulatory requirement, etc. That's a much more complex transformation, I think. And that's the switch, if you want. And you need also much more of innovation going out in the digitalization. Robotization is buying a technology most of the time. The others is a lot also of inventing, creating, and transforming. And so I think the advanced digitalization with robotization is a kind of a more easier part, and the other one is the more complex. And there you need the infrastructure, you need the proper regulation, you need a lot of skills and capacity of the economy to transform. That's my reading. I'm not a digital expert, maybe others are much more than me, but as an economist, that's my reading. Anita?
Personally, I would be very careful to read too much into this information. I mean, my take would be Hungary is particularly good for robotics. This is a positive. I think more research would be needed to see why is this the case. Is this, like Deborah said, because they purchased? But I mean, already from the past, Hungary was known for excellent also intrinsic robotic research. So maybe there is something there which Hungary is particularly good at compared to the other Europeans, and that might be an industry that you might want to particularly foster, because this is something where you have a competitive edge. And I would probably recommend to do the same for the others, because big data might be low, because you might not have, you know, companies that are particularly, you know, having those kind of, you know, European or global spread where you have access to this big data, where you then meaningfully use this for your business. So I think we have to be careful because digitalization costs money, and it might not be that for every productive process you need the whole, you know, everything that digitalization can offer you, because you might be, you know, if you're a local producer, you might be well enough off if you have only, you know, the data of your clients and your competitors. So I would take this with caution, and I think more research is needed for the underlying industrial structure and what competitors are doing, and whether Hungary is particularly behind in that particular sector before drawing conclusions.
Anybody else?
From our perspective, we would like to start this kind of digital transformation process with us, with ourselves. Because so before we want to give new tasks and job for the government or the policymakers, so therefore we have decided to transform all of IT platforms inside the Hungarian bank holding towards a neobank structure like Revolut or other competitors. So therefore, we started this process. It will last more than 2 years to enlarge this new system, and inside the bank we will develop it. So this is another solution compared to the lonely neobank structure.
Gabor, you wanted to say something?
I don't really have bright ideas about this question.
Me neither.
No, okay. We have another difficult question.
Yeah. Deborah, I would like to take opportunity of the fact that you are here to ask you a general question. Let me give you the comments. You have given some projections for Hungary and for the EU on growth and investment. This may have been done a few weeks ago. The war is not going to end. And even if there is a ceasefire, it's not a steady state situation. So this is going to change a whole lot of things in the world. The war, in my view, is going to continue, will be increasingly destructive. So all these numbers will become, will change. Now, there are two things that, however, is worthwhile to thinking for the European Investment Bank right now. One is that EU countries will spend much more on arms. That's the number one thing. Number two, they will have to spend money on trying to diversify the oil and gas routes. You know, you need pipelines and whatever, depending on countries, but it will cost money to everybody. And look at this from the point of view then the debt that is already, at each crisis, the public debt went up. You know, in 2007, there were only 4 countries that significantly exceeded the 60% debt level. Now there are 14. And we thought that, you know, from now on we will grow and it will come down. No, we will growth will come down and the debt will continue to increase. So these are the things that we really have to address. And I'm just encouraging the European Investment Bank to do that. But if you have any comments on what I'm saying, I would be glad.
No, I think it's
thank you.
It's definitely good, and actually you are. I was anticipating before asking question to the floor that we still had a part of the panel to discuss about the effect of the war on the economy and what we were risking. So what I would do is actually go to the panel, and then I will close with a little bit of the view on Europe that we are developing at the moment, having in mind it's the unfolding is still very unpredictable on various levels. But then I go back to the panel, and actually you heard the question, but it's very similar to the one that I had. So what are your major constraints in terms of the spillover of the war on the economy? What are the major challenges that you see in your business, in your activities related to the war for the Hungarian economy?
Can I? Okay. So this is really a very relevant issue what Mr. Sapari raised with the energy mix and diversification. We really think this is to be an issue, and this is a short-term issue and a longer-term issue. So, for instance, as a banker, I would never finance now a gas-fired power plant for a longer term. So we should prepare ourselves to change from the current energy mix into something else. I see two options. One is nuclear, but we know the questions raised or question marks raised around nuclear. And the other is renewable, and first of all in Hungary because of the given geographical conditions, solar. But with renewables, we always face the problem that we cannot store renewables, and we cannot put the excess energy into nowhere. And although there are all technologies to store this energy, for instance, pumped power plants. But if we build pump power plants, these are very costly and environmental destroying. So I think this cannot be a solution, but we should somehow to find out what to do without it. We learned that we have plenty of gas resources under Hungary, but to mine them, it's really very costly, even if the gas prices are at the top now. So it's really not an easy issue, but we as banks should really very much take care of whether our clients use a risky energy fuel platform or not. For instance, chemical industry, where the natural gas is a raw material. So it's a kind of question mark. Artificial fertilizer producer, for instance, who uses gas currently coming from Russia. Maybe tomorrow it will not come. So, and if we are there with the financing, how to handle this? This could result in a very difficult problem in the financial sector. So we as banks and also the regulators should concern about this.
And what can you do as bank?
We are absolutely cautious. We somehow should think about to build in our risk protocols to take account these issues, and we should be very, very cautious about that.
So among this huge issue because of the war, I would like to focus on the digitalization and the green financing, if I may. Yeah. So we saw 2 years ago how COVID could boosted the digitalization processes in the companies. Many leaders of firms expect higher energy prices, which ceteris paribus shortens the break-even time of green financing and green investments. Hence, it can help in the financing of the developments as well. However, more and more companies report unexpected changes in their value chains, partnerships, and these are usually more important in companies' daily operation. For instance, if my supplier tell me they will no longer sell a product which is a must for me, I'm rather interested in finding a new supplier than moving to greener operation or increase the efficiency within a company. So it's certainly unclear whether elevated energy prices will remain after the end of the Russian-Ukrainian war, but if they remain, companies will be keener to move towards green transition, I think.
Anita.
Yeah, obviously, I mean, a part of the immense human catastrophe that is unfolding in Ukraine and the implications then via the refugee stream into the neighboring countries, the main impact for the time being is energy scarcity. And I think everybody needs to get prepared for that. And the only thing that is short-term available is energy savings. So I hope that every company that is willing to invest is at first looking at how they can save energy before planning further, because any other alternative source of energy is not going to be available in the immediate short term. You know, I mean, you can build new nuclear, new hydro, new solar. It all takes, you know, months or years. So they need a plan B. But as I said, this transformation probably would have happened or would have needed to happen anyhow because of our climate crisis that is ongoing as a side crisis. It has been now superseded by the Ukrainian war, but the climate change is still there, and the global warming is still there, and our fossil fuels are depleting and are not infinitely available. So this is what they can do. What I think the government needs to keep a very close eye on is whether there are some sectors where some important goods that are important for Hungary are not suddenly ceasing. Because, I mean, you've seen this in big shocks that suddenly, I know the wheat price goes up, suddenly all of the bakers go out of business because there are some SMEs that just cannot sustain those kind of shocks. And I think there needs to be a close watch on those essential smaller companies that may be not able to absorb energy shocks, and then suddenly these goods are missing. And then targeted subsidies or targeted support need to be given to these sectors. But I think people now have, at least now they know that energy is a problem, so they can prepare themselves, they can make plan Bs. I think the financial sector can also signal to the regulators and to the government where you would need to see support for potential non-performing loans coming your way, and one can get prepared. I mean, there's nothing else really that can be done for the moment, and just hope that it's not going to get any worse.
Gabor?
Yeah, I think I can more or less just echo what has already been said in the panel. So I think when the war broke out, I think for all of us who work in the green transition, was the first question, is the green transition still important, or these new, more immediate, more tragic events will just suggest that we should put the green transition on hold and then turn to these more immediate and more tragic events. And I think for all of us the question is whether we can really keep the green transition high on the agenda, and maybe, as it was said, a little bit size all the opportunities which come from these very tragic events, like, for instance, the increasing awareness about energy, energy efficiency, renewable energy. And so far at the Central Bank, I can say that the topic has remained as important as before. We are even trying to step up our efforts to, again, help banks and the financial system to keep on their own agendas the sustainability topic, even if, of course, this war is tragic for and it affects all elements of the economy.
Okay. Is there any other question from the floor? If not, maybe then I try to wrap up, and in the wrap up, I also try to answer to the question. What we are doing is looking at the European level. I think, like all the economists are doing in this moment, we are trying to understand what are the major concern and risk and the transmission channel of the war on the European market. And part of the analysis is still evolving, but we are trying to look at households, the transmission channel on household, the transmission channel on the corporate sector, the banking sector, and then on the public sector point of view. On the household sector, the first analysis that we are doing are, we are trying to understand at a European level basically how and it's related very much to high inflation, the effect of the crisis, how are they translating in terms of disposable income of households. But what we are mostly concerned is households that may go before the poverty lines. So we actually, in the first analysis that we are doing, we see that there may be quite some increase at the European level. In some countries more important, mostly in countries which have the lowest GDP per capita at the European level, but we see that the increase in households at risk of poverty may be substantial, so some 20% of the numbers going forward, with a different assumption on persistence of inflation and the shock. And it very much depends on the distribution of income in the countries, but also on the weight of food and energy in the consumption basket. There we see very much differentiation among European countries. The other point is corporate. I think a part of the story as well, it's a new shock on a previous shock, but the new shock is weighting mostly on different sectors. They are not the same sector that faced the COVID pandemic, not necessarily. So it's different sectors. And, but the main concern is that what I was hinting in the presentation, that we came out from the pandemic in a situation that was a bit too good to be true. It was very much relying on the pent-up demand, on the policy support, etc. And we needed to see how the corporate sector would behave in a more normal condition without all this support, and now the new shock is coming. So again, in our analysis, we see that we still remain, we come from very, very low level of non-performing loans. We would see a doubling, but still very low. So it's not still dramatic on the corporate point of view. On the banks, what we see, and then there we have a survey that we do on all banks in Central Eastern Europe, but we also look at the ECB surveys. What you see is immediate tightening of condition. It was immediate after the war. In Central Eastern Europe has much more tighter monetary policy. So this will come as well. And then on the government point of view, of course, you have various pressure. You have the military expenditure that is going back on the agenda in all the countries, particularly the NATO countries that have to get to the targets. And then you have a lot of pressure on from households on compensating for the energy shock. And then you have the additional expenditure related to the green transition. It's a lot of burden and pressure on the public sector, and I think managing it and making sure that the effort go in the right direction, continuing to push on the green transition, etc., and not only compensating for the short-term shock is something quite important. That's where our thinking is going. We don't have the crystal ball. It's just a group of economists thinking on the European level. But I think for the if we wanted to end with a positive note, the COVID pandemic, surprisingly, it ended up as a big, big shock. We all saw it would be a catastrophe. It has been very painful, but at the end, it meant an acceleration for the digital transition. The energy security, so the war with the energy security part maybe getting back to coal, but it can also be an acceleration for the green transition, and hopefully it will go in this direction. So that's probably the closing statement that I may have. We end a couple of minutes in advance, but thank you very much to all my panelists for the very nice discussion. Thank you.
Thank you from my side as well, Deborah, and the participants of the panel discussion for these great and inspiring ideas, however, somewhat concerning about the future. But on a more positive note, I'm very happy to announce we have a small reception outside for our on-site participants, so please join us in this little gathering and enjoying the positivities of physical events. For online participants, please make sure to return to the MMB's YouTube channel, where this event will be available for watching it again. And as for summing up, I'm very grateful for all the great speeches, for the questions, and for the audience for the attention. And I wish you a great rest of the day. Goodbye.